Hi, I'm Scott from Solace Financial, and hold on for a ride. President Donald Trump came out with his tariffs or reciprocal tariffs yesterday, and their stock market fell about 4% last night. Our share market's down about 1% today, but looks like it's slowly coming up. For the whole 1 year, our stock market is now at 0%, so we haven't really even had a loss for the year yet, but expect some more volatility and opportunities to buy some good quality assets at pretty low prices in the next couple of months. The stock market since 1985 has averaged about 12% per annum, and you can see on this chart, and if you've been a client of mine for a while, you would have seen this many times, that we usually have a pretty consistent long-term average. So this volatility is pretty normal, pretty expected, and it's nothing to be too concerned about. It's probably a pretty good idea not to look at it for a little while. The good news for most of our retired clients is that about 40% of your holdings are in bonds, and with this volatility, we've seen some really good returns in bonds over the last week, with generally bond prices going up 1% just in the week. So this really counteracts the share price fall in the last week to soften the blows of it all. We're always looking at the different markets and how they're performing. This chart here is a chart on all the different asset classes that we've been looking at last month. And you can see that most of them are red for the month. The positive signs are a small positive return in bonds, but you'll also see a pretty large return in gold, up about 9% for the month. This chart here is the gold price chart for the last few years, and you can see a nice big increase in there. With this market volatility and gold price changes, it does start to create opportunities for us to buy some really good assets. For instance, there are some gold miners in Australia at the moment, sort of your medium size, that are trading on a net asset value of 0.5. What that means is if you bought all of the shares on the stock market of one of these smaller gold companies, and maybe it cost you $300 million to buy all of the shares. If you went around and sold it off for parts, like their equipment, their mining lease, parts, machinery, that kind of thing, you would sell it for about $600 million. So what that's telling us is that's trading on a really big discount to what the company's worth, and we're seeing a big increase in the gold price. So that might give us a little bit of opportunity this year to pick up some really good bargains. That's it for this month. If you are concerned about the market volatility, please don't hesitate to give me a call. We're always here waiting for your call if you are concerned about it, so don't think I won't call Scott and bother him. Please give me a call. That's what I'm here for. Thank you very much for your time.